I'm Richard Flax from MoneyFarm, and this is the latest in a series of videos highlighting some of the key issues in financial markets. Over the weekend, we've seen signs that governments are going to spend ever more aggressively to try and offset some of the impact of the global crisis. In Germany, we've seen announcements that the government will borrow in excess of another 300 billion euros, while in the US, we continue to see negotiations between Republicans and Democrats about the scale and the scope of a fiscal stimulus that's likely to exceed $1 trillion. Now, we haven't seen that bill passed or an agreement reached, but we would expect to see that over the next day or two. The point here is governments are working hard to try and mitigate some of the impact. They won't be able to offset it completely, and we'll continue to see a meaningful drop in global economic activity, certainly in the first and second quarters, and maybe even beyond. The scope and the scale of that recovery are very much up for debate. The Chinese authorities have expressed some hope that they could see a recovery in China relatively quickly, by which we think they mean over the next couple of months. And that's something to keep an eye on to try and understand what could happen elsewhere in the global economy. In financial markets, we continue to see signs of some liquidity stress in certain parts of the market, notably in high yield, which is typically a less liquid asset class than some of the others. But we think overall, central banks and monetary authorities have done enough in terms of injecting liquidity to ensure that the plumbing of the financial system will continue to work relatively well. Trading will be challenging. Spreads on assets will be wider than they have been in the past. But overall, we expect financial markets to continue to function relatively well, and we continue to expect to be able to trade quite comfortably. Thank you very much for taking the time to be with us, and we look forward to speaking to you again.